You are watching EnergyNewsTV.com, your home for fresh energy news delivered daily. This is the early petroleum market report for December 9, 2024. As the calendar presses into the second trading week of December, WTI crude oil futures rose to above $68 per barrel on Monday, supported by rising geopolitical tensions in the Middle East following the fall of Syria's government. Over the weekend, rebels ousted Syrian President Bashar al-Assad, ending the Assad family's 50-year rule in a move that heightened fears of further instability in the Middle East. Meanwhile, Saudi Aramco, the world's biggest crude oil exporter, has reduced its January 2025 prices for Asian buyers to the lowest since early 2021 amid weak demand from top importer China. It also cut prices for Northwest Europe and the Mediterranean while made no change for North America. These developments came after OPEC Plus delayed planned output increases by 3 months until April and extended the full unwinding of cuts to the end of 2026. On the supply side, an increase in U.S. oil and gas rigs last week signaled higher production, which also weighed on prices. Turning to the natural gas market, U.S. natural gas futures climbed over 5% into the $3.20 per million British thermal units, recovering from last week's near 8% drop, as demand is now expected to remain stronger than previously anticipated. While warmer than normal weather forecasts suggest reduced heating needs, this impact may be offset by higher feed gas volumes to LNG export plants. Gas deliveries to the nation's 7 major LNG facilities averaged 14.2 billion cubic feet per day in early December, up from 13.6 billion cubic feet per day in November, and nearing record highs. On the supply end of the spectrum, December production in the lower 48 states rose to 102.3 billion cubic feet per day, up from 101.5 billion cubic feet per day in November. Analysts expect further production increases in 2025, driven by strong export demand and recovering prices. Meanwhile, Energy Information Administration weekly natural gas storage data showed a storage withdrawal of 30 billion cubic feet, leaving inventories at 3,937 billion cubic feet. The storage draw was much lower than market expectations and considered to be a bearish catalyst for prices. Thank you for watching Energy News TV, your home for fresh energy news delivered daily. Please be sure to like and subscribe to our page. Stay tuned for more fresh energy news.